Hey everyone, Dan here. Today we're going to do something a little bit different. I'm going to present a bunch of information on a stock that I'm pretty bullish on and kind of make the case for where I think it might be headed, taking into account the chart and the technical analysis, but also other factors like news and the company itself, earnings, other investors, that sort of thing. So I would be super interested to hear how you folks enjoy this video versus all of the others that have been really focused just around the trend analysis and the technicals. I'd be curious to know if this is like much more appealing to you, or if a mix of both would be appealing. I would say that, if I do something more along the lines of what I'm presenting today, I will probably only be able to cover one, maybe two stocks in a video, because it's definitely more time consuming. Whereas, in the pure chart videos, I can do several in a video. As you've seen, I think yesterday's had 14 tickers in there or something like that. So anyway, please, add your thoughts in the comments below. I'd be really keen to see how this strikes everyone. But anyway, before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. Feel free to share these videos also on Reddit or Twitter or Facebook or anywhere that you share things. And let's get right into it. So I know that we've been recording the screen, and so I know that you know that it's jd.com. That's we're going to focus on today. So no surprises there. But let's basically run through the case that I see for JD. I actually, full disclosure, I did not have a position earlier in the day today. As I was compiling this deck, I convinced myself to take a position. So I took a call option position. I think it's an $80 call option that expires June 18th or something like that. Don't quote me on that, or just go double check what the options chains have available right now. But I'm pretty sure it's $80, but the date might be slightly off. But anyway, so I did jump in because I convinced myself. So we'll see. So I do have some skin in the game here. But let's take a look. So if you're unfamiliar with JD.com, you can easily just look them up, so I won't spend a ton of time on this, but they're an e-commerce company, though we'll see in the next slide that they've grown well beyond e-commerce, and that's what I think makes it extra interesting. It is a company based in China, so I know there's been a lot of sort of hubbub around the Chinese companies lately. I think that companies such as Alibaba or JD or Baidu, I think that these are like safe bets. They may get some sort of like stickiness in terms of like having to pay some fines or something like that, but their chance of being delisted to me is pretty small. And so to that point, they were founded in 1998, so they are over 20 years old, and they went purely online. So they've been online e-commerce for over 15 years. So that's what they are. To get more specific, they're actually way beyond just e-commerce, which is what makes them super interesting to me. So they invested in the high tech and AI delivery through drones. They have the largest drone delivery system, infrastructure, and compatibility in the world. They have started building drone delivery airports, which is really interesting. And they are working on their first autonomous truck, which, depending on how old that information is, that might be out by now. So it's really interesting that they are heavy into that. I mean, I know that like Amazon has been sort of beating that same drum as well. But as far as I know, there hasn't been any sort of like systematic rollout of those things. And as far as I know, Amazon is not building their own autonomous vehicles. Whether that's a smart decision or not, I don't know. But to me, it was really cool to see how far outside of the e-commerce box JD was looking. And in August of last year, they announced that they'll be investing $830 million in a JD Health unit, which will be one of China's biggest pharmaceutical retailers, with they're focused on one of their focuses is this 30-minute drug delivery service to their users. So there's been some similar things like that springing up in the U.S. as well, and they offer a variety of online telemedicine services as well. So again, just sort of like I don't want to say that they are building this everything under the sun kind of company, but they're expanding out into really interesting areas. Seemingly pretty strategically beyond just, hey, we're going to facilitate a transaction online between a buyer and a seller. Their business performance has been great. This basically highlights their excellence and consistent revenue and earnings growth. You'll see that on the left-hand side. Grew by a solid 29% recently, and then their insider activity, it's not as easy to get a hold of from the Chinese companies. Like if you go to the NASDAQ site, it'll just tell you that it's not available. But I was able to find this note that it definitely appears to be positive, with the insider activity coming in at 15% of the business, and so that's seen as a positive sign for sure when insiders are holding and not selling off. So the analysts, I know there's sort of like a mixed emotion around analysts in general. A lot of times they're seen as these sort of like overpaid, overpompous kind of just monkeys that generate quotes. Maybe not as bad as like the short seller reports, to be honest, that are so self-serving and can be so erratic and irrational at times. But analysts do have sort of a stigma around them where they can be sort of just like nonsense at points. But the thing that I would note about like analyst rankings is a lot of people do take them seriously. So even if the analysts are kind of just like number crunchers and monkeys pushing out figures to publish online, there are a large swath of investors or some sort of stakeholders that will take those things seriously and use things like a strong buy rating, like you see here, as a bit of a gospel, and will buy based on that strong buy rating. So what we're basically leveraging here is not that the analysts are correct, but just that there is a huge flock of investors that will do what the analysts are saying. And so if that's the case, then some of these things are sort of self-fulfilling prophecies. And we see that there's a strong buy rating from 15 of 16 analysts, 15 buy, 1 hold. And that's in the last 3 months. And their price target on average is 107, with the high being 122, the low being 189. Both, so even the low is much higher than it is today. So that gives us a lot of upside. If it gets to that average price target, as you see right there, it says 42.52% of upside. So you hold to there. If you buy in today and you hold there, then you're going to make a 42% gain on your investment. Pretty solid. I know this has come up in other videos, but apologies if you hear screaming in the background. It is a baby who has woken up. So this thing is off. But anyway, let me see if I can, oh, nope. Okay, let's go back. So these are sort of growing pains here. So these red boxes are off, but let me talk about funds seem to be fans. So on the left-hand side, you'll see Kathy's ARK fund, Kathy Wood's ARK fund, has been buying JD as recently as yesterday and the day before, 2 buys the day before, and then a week before that, so on and so forth, all the way through to the beginning of March. So they've been buying it for about 6 weeks now. All buys, no sells. So that's pretty strong sort of opinion from Kathy Wood's fund, it seems. These red boxes are slightly off, so apologies there, but this taken from NASDAQ. So this is talking about the iShares MSCI China ETF. Their symbol is MCHI. And so there was a big uptick in inflow with 2.5% increase week over week on the outstanding units. And so the largest underlying components of that were Alibaba, of course, JD.com, and Baidu, which we talked about or mentioned briefly earlier. So JD is definitely in the mix of a lot of these funds that are buying up Chinese stocks at the moment. I would assume or suppose that that is with the expectation that they have been heavily discounted at this point for various factors, the market sell-off, plus the Chinese stock sort of concerns, and that they're looking for those to bounce back, especially something like JD, which has been around for a couple of decades now and has a proven business model with a lot of revenue. The charts, so it has been in this down channel that you see in red. There are several gaps up though to fill. You see that sort of like double gap around the $81 area, and then a tiny gap that's like between 82 and 83, and then another larger gap that I think probably deserves to be filled in the $85 area. So tons of reasons for JD to get out of this channel. Obviously, I charted this earlier today. This is on the 1 hour chart. That's why you see it cutting off today about midday. That's when I made this deck. And so it may have popped out of there throughout the day. I didn't check before making this video, so who knows, but I would look for it to get out of the channel by establishing support at that 76.53 level, and then using that support to start to jump up to fill that first gap, bring it to about $82. I'm looking at this for sort of like a longer term hold. So, if I get in the share game and not just the options game with JD, I'd be looking for a longer term hold over 100, like we talked about before. That's what the whole video is about, to catch basically that 40% or so of upside. The indicators, so on the macro, you see that red line on the chart area. That's the 180 MA. So that confirms, that JD is in a downtrend, which we know because we just saw the down channel. The micro, however, that orange line that you see on the chart is just starting to cross over the purple line, which indicates the 12 crossing over the 20. So that would be the first step in that 12 sort of flipping all of those MAs over. So it would be the orange on top, then the purple, then the yellow, then the red. That would mean that we are in a bull trend and things are looking upward. The MACD had this really steep crossover, which is great to see. And also it crossed over to very deep points. You see the signal was way down there at about minus 0.5, which is really deep on the histogram. And so, I would look for that steep crossover to give us some good bullish momentum. I'd be careful because there was an increase in bearish momentum recently, but at some point you gotta look at these things for a potential reversal. So I'm calling this a potential reversal. The RSI, I'm a little bit mixed on because it's spent so much time under 30, as you can see there, that now that it's gone mid-range, meaning about 50, a lot of times what happens is when something comes out of a drunken stupor of being oversold for a long time, it has this kind of hangover effect, and it's unlikely that it's going to go from oversold to overbought in one fell swoop, and it'll often hit the mid-range, meaning like 50, and it'll act like it hit 70. So it'll hit 50 and it'll start acting like it's overbought, and then it'll come down, and it needs to establish itself in the mid-range a little bit before it's going to make a push up into true overbought territory. So kind of a mixed bag on the RSI, but none of these things as standalones are the be-all end-all as far as indicators go. So that is my case for JD getting over 100 in the near term. Again, please like and subscribe if you enjoyed this video or the other videos. Feel free to share this, and good luck if you get into this one. Good luck no matter what you're trading this week. I hope you had a good hump day and that you are ready to close out the week strong. And on that note, I will see you all in the next video.